Hello and welcome back to Roguefx Trading course. This is going to be our last episode of the JodyFX 1.0 trading course. This is my first course and definitely not my last. I personally make it an intention to continuously expand my knowledge when it comes to the Forex market and definitely when it comes to my individual well-being, how I react to losses, how I can increase my capital exposure, and also how can I increase my risk tolerance. There's definitely levels to this industry. And to be quite honest, the levels don't necessarily start hitting, or to another extent, you don't necessarily start feeling these levels until you have, well, obviously mastered your strategy. So if you haven't mastered or any kind of strategy yet, understand you are not trading live. You are not trading Forex to make money. You are trading Forex to learn about Forex. That is the sacrifice that this market requires of you. That is the sacrifice that any market, well, investments requires of you. The time spent gaining the knowledge, the time spent learning how to apply the knowledge, and the time spent actually applying the knowledge to the greatest of your ability, of course, while balancing a healthy lifestyle, balancing social connections, balancing maybe even your work life. We all can achieve financial freedom with just a couple of years of hard work. We all can achieve this. We all can achieve Forex mastery. There is enough money to go around, more than enough. But are you willing to make the sacrifices? Are you willing to heal? Are you willing to do what it takes to get to that higher level of frequency, higher level of thinking? Let go of the old beliefs, old paradigms that this world has indoctrinated inside of you. You are worth more. You are more. But you need to believe that first, before anything, before anyone. This is going to be the last video of this series. It's going to be saved under the playlist Roguefx 1.0. I understand I plan on increasing my knowledge. I plan on redefining my videos. Maybe I'll throw out a 2.0, 3.0. It will be free for all who decide to obviously put in the work, study these videos, understand that knowledge isn't so stiff, it's malleable. It bends, it connects. What your order block is, someone else's significant candle is. What your range is, that's someone else's bullish engulfing. Understand that. Different perspectives in the market, different ways to make money, but it's all there. What's stopping you is your inability to trust the process, to be patient, to tolerate a bad day, a bad week, a bad month. This is the simplest I've ever seen Forex. If I'm going to be honest, this is the absolute simplest. There's no getting any simpler than this. You have your range, internal and external range liquidity. Choose your entry. It's that simple. Today we're going to talk about stop loss redefinements, and we're going to talk about how to locate our overall targets, if that's going to be external range liquidity or internal range liquidity. To the left, we have a breaker, an engulfing candle, or a liquidity grab, I should say, and then we have a bearish engulfing. To the right, we have a bit of a indifferent candlestick pattern, right? We have maybe a rejection block that's bullish. We have an order block that's bearish. Now that it's a bearish engulfing, I'm going to show y'all the differences between these two, how you can take advantage of it, and how you can redefine your stop loss. And in doing so, we're going to go to some live chart data, and we're going to work on a few setups, not a lot, but a few setups, and see if we can redefine our stops and, obviously target the right liquidity, right? Because there's liquidity everywhere. It's what moves the market. It's what carries these impulses. As you can see with this breaker block, price is essentially in a consolidative pattern. Price has, at this point, created buy side and sell side liquidity. Price manipulates out of this pattern and distributes towards lower prices. On the pattern to the right, price rallies high. We have a bit of, and I want to say indecision, but we can say weak low being established. Price rallies once again, maybe liquidates the high to the left as it being obviously a weak high, and then continues lower. By the first break, I want you to understand it has the potential to rally higher. Still provides us a weak high, break structure yet again, this being an official break of structure, rallies once again, takes out internal range liquidity and continues lower. Your redefinement is going to be this breaker block. You do not move your key level. You don't move it up. A lot of people get this confused. Your stop loss is the one that's moved, and that's called a redefinement. You can see price has established a high, established a weak low, retested, I don't know, took out the weak high to the left, and or maybe mitigated an unmitigated wick. Either way, price performed a choke. Price rallies higher, provides a failure swing, mitigates the liquidity to the left, rebalancing price in order to help it continue towards the lows. Your refinement is going to be this fair value. Fair value coming from where? Obviously, your retracement. However, if you were intrigued to know about price action, what can we see right here? It's an imbalance needing to be filled. These two patterns are great for confirmation entries. Amazing for confirmation entries. You just got to know how to point them out. No, they're not going to be the prettiest every time. Yes, you're going to be confused majority of the time trying to figure out which POI is valid and most importantly, which POI is not valid. But it's a part of the process and you need to learn to trust it, or else how will you ever grow? How will you ever heal the broken parts of you that neglect, that fear, are intimidated by losing? Not only losing, but in general, or in a sense, winning. Because what happens when you get that first win and euphoria kicks in and you're not necessarily balanced to a certain degree and you go off and blow your account in a week off of one win? There's levels. I promise you there's levels. I'm not telling you this to scare you. I'm trying to wake you up. I'm trying to take off those rose-colored glasses and help you understand that this is a business. This is a zero-sum game. While you're losing, someone else is very much making money. While they're making money, you're losing, and vice versa. This is a blessing and a curse, depending on how you view, how your perspective is. That's why it is imperative that you heal, that you take time, understand yourself, your psychology, understand why you react to certain situations, understand why other people react to certain situations, be more observant, stop being so loud, and stop paying attention to all the noise, whether that be market structure or other people in your ear trying to figure out how to trade or how you trade. You shouldn't be looking towards the next trader about their trading plan. No, that's not how this works. Your trading plan is yours. Why? Because we don't all live the same lives. We don't all have the same routines. We don't all have the same energy levels. Everyone resides on a different frequency. With that being said, some people are going to understand faster than others. Some people are going to learn how to mark up a chart faster than others, but they're going to struggle with live execution. Some people are going to be excellent live executionists, but they're going to struggle in the beginning, trying to learn, trying to adapt their minds to what they are doing. Because it's not a regular job. It's not. It is a job, yes, but is it not? Is it a regular? You can literally make thousands from your house. That's not a regular job. This is a blessing for those who have eyes to see that blessing and recognize that blessing and embrace the challenges, the hardships, the BS. You feel me? Enough of that rant. I'm sorry. I think it's important that you know, because if you don't know, it's a rude awakening. I promise you, it's a rude awakening. We're gonna move on to charts. As you can see, price performed a change of character. Yes, we are bearish, but in this sense, we're bullish. Price broke a structural high. What is a structural high? Three candle formation. That's liquidity. Liquidity grab, break of structure, retest, break of structure. Choke, break of structure. Where's your entry? Where's your stop loss? What do we have to the left? POI. How do we redefine this stop loss? If our protected high is right here, and we have internal range liquidity right here, that's how you redefine that stop loss. That's 5% on the day. Since in this sense, we are basically bullish. We're bearish, but we're bullish. And that's that's the part you need to get used to. Every time you trade these markets, your in-between ranges. In between, meaning if you don't target a specific area, you might get stopped out or break even, and your time has been wasted. Not necessarily, but are you going to go over that trade? Are you going to study your market analysis and on a consistent basis? Not just one time, not just 3 times. We have our bullish trading range. We hit external range liquidity. What is our target? Internal range liquidity. We have a POI right here. As far as this long, price took out a pair of equal lows. Liquidity grab. We have a rejection candle or rejection block. We have an indecision candle. Price took out liquidity. Slanted lows. No matter how weird or off, slanted lows. Continue high. Where do we target? Look left. The smoothest of equal highs. That's your target. How do we redefine the stop loss? Fair value, 11%. Price establishes our bullish range, leaves a footprint in the market, continues high, provides internal range liquidity in a 3 candle formation, raids, reacts off of a point of interest, continues higher. How do we refine this stop loss? You can say fair value, or you can wait until this rejection block is closed. This is your entry. We can put it just right under this unmitigated wick, which in turn is used as a breaker. 8%. Price establishes our bearish range. As you can see, price prints our internal range liquidity, which happens to be what? 3 candle formation. Liquidity grab. We are now in a point of interest. How do we redefine this stop loss? Look left. What's apparent? Bullish rejection block. You can see the confluence of events when we have a strong high protected and a strong high protected. That's 4%. And 2, 4, that's 8 candles. Imagine you're on the 4 hour. That's a day's worth of profit. Smooth. Where do we target? Imbalance. So in turn, what is this basically? S&R liquidity. Fractal markets. As you can see, price has established our bearish range. We have internal range liquidity being taken out to the left in what? Trend line. Pretty simple, isn't it? I think it's simple. Not just because I've studied it for so long, but because I understand my trading plan. How do we redefine this? Look left. Pretty smooth order flow being met. Strong high, 6%. Where do we target? Slanted lows. It's a target. Doesn't matter if, we can definitely keep going. You can definitely take your partials and hold. That's on you though. That's your trading plan. As you can see, and I'm gonna let you know right now so we can just obviously continue towards the highs. Did this high break a significant or major high of any kind? No. The high is up here. How did it break? Of course not. So what does that make this? That's right. It's a target. We know our 30-minute, 1 hour, 15-minute target. We buy all the way up to there. No matter what, we are in longs because price is already drawn there. Price has performed a change of character, established a footprint, provided a failure swing, took out internal range liquidity, 3 candle formation, and then continued high. How do we redefine this stop loss? Can you tell yet? This is S&R liquidity. S&R flips up. Same labels for the same terminology. Do not get confused. This is simple if you allow it to be. Even at that, it's not simple. So just make it as simple as possible is what I'm saying. We have a bullish range. Price provided internal range liquidity in what? 1, 3 candle formation. And 2, this is a pretty obvious order block. Yes or no? We use that as internal range liquidity. How do we redefine this stop loss? Look left. What do we have? We have a rebalancing in price. S&R liquidity. Of course, we can continue to hold. However, it's your trading plan. This is going to get a bit tight, but stay with me. We have a strong low, weak high. Price provided indecision. Retested that indecision. Your stop loss for any regular or average Joe would generally be below this strong low. But the big dogs, the risk takers are gonna take that 3. I don't usually go for 3. I'm usually at 5%, but it really just depends if it's worth it to you. However, the profit is definitely profit. You throw $1, that's $300. Price provides our bearish range, retest, and continues lower. What did it retest in particular? Nothing too much. Yes, this point of interest. Yes, this bullish rejection block to the left. Yeah, you can say it retested that. Maybe even the breaker. Maybe even the breaker. However, if we're being real, what really happened here? I'm going to give you a hint. Price established support, broke higher. We're not going to pay attention to this noise. Price provided a break of structure or change of character, continued lower. What did that leave behind? Price left behind a weak high. We need to come back and take that out. Price uses that weak high to rebalance price and continue lower. Same thing. It can be a wick as long as this sometimes, and probably longer sometimes. It's called fishing. if you believe it or not, it's called fishing. And then continue lower. Simple rebalance in price. Continue lower. Where do we target? What did we say three candle formations were? Liquidity. Price provides a change of character. Oh, I'll take that back. Price provides a choke and a break of structure, provides two indecisions, raids, mitigates a point of interest, which happens to be a rejection block, continues higher. How do we redefine this? If we look left, we get a bullish order block. Redefine. It's not going to be perfect every time. Of course not. However, when your risk tolerance, when your patience increases, it doesn't matter to a certain extent. For our last example, prices performed our bearish range, provided a failure swing, taking out internal risk liquidity, which happens to be what? Three candle formation. How do we redefine our point of interest from a 4%, maybe 5%? If we look left, we have a rejection block, which means it's rejecting all bullish pricing. Yes, it's a bullish rejection block, but anything above that is an unmitigated wick. That's rejecting or rejection of long orders. If we look below that, price seems to have gone through this rebalancing period. As you can see, it's more of a break and retest. If I take this high and pull it down, and this is me using my imagination, and it is understood that this is our protected high. Why? Because it's our range. If it's not our range, price should go straight through. Yes, we redefine that stop loss. We go from a 4% to dang near 10%. Where do we target, guys? Where do we target? Three candle formation. 1, 2. I don't care if it's over here. It's a part of it. However, this counts as well. 1, 2, 3. You have your range. And if anything, you get more of your return on your return. And this is a counter trend trade. Price gave out a range of 200 pips. Price gave out a return of well over 400 pips. You do the math. And as far as internal range liquidity, is this not a trend line? Confluence of events. And that's when it gets fun. That's why I encourage you to hold on tight. Join the mentorship. Let me teach you how to do this. No, it's not going to be free. But what is free? You can't even learn Forex for free. Why? Because you're egos. You don't need a live account now, especially when you know you don't know what you're doing. That's just my take. Now, eventually, yes, but that comes with your overall confidence. You're not doing it just because your ego says, I'm ready. You need to know this is a business. Unforgiving one at that. I'm saying this because I know. I've been through it. This is the real deal. I am aware. But it also took years to develop this. Years. Are you willing to put in? I'm at year 4. 365 days a year, 1% better. That's 1,650%. How bad do you want it? How bad do you want this financial freedom? How bad do you want to wake up on your own time? If you did make it this far in this video series, I do appreciate the love. I do appreciate the support. We do have more content on the way. This is just the first of many. I do aim to make my course as well as my, YouTube videos in general as simplified as possible because I know what comes with this. So if you have one strategy that provides an endless amount of opportunity, that's all you need. What do you need schematic for? What do you need Elliott wave for? What do you need supply and demand for? And it doesn't work. What do you need smart money for if it doesn't work? I'm just as confused. I was just as confused until I figured it out. Now I'm here to share it. Now I'm here to teach it. I do appreciate every one of you for tuning in. If you did enjoy this web series as well as this video, be sure to hit that like button, subscribe to the channel because we have more heat on the way. If you do like how I teach, join the waiting room. The mentorship does go live in 2023. However, I will be taking on a select few invested individuals. They will be given early access, as well as a couple more gems that I'm not necessarily willing to put out on YouTube right now. But I mean, obviously, on the domain, I mean, it's fair game, right? You paid, so I have to give it to you. No, it will not be free. It will be worth the time and effort that I've obviously put in. However, there will definitely be different options as far as plans. I do understand not everyone has bread like that. I understand the struggle because I come from it, of course. Until next time on Jody FX, on Roguefx Trading Course 2.0. Who knows? Who knows what it'll be called? Y'all have a good day.